guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a wonderful start to your weekend. Now, Bitcoin not exactly having the greatest start to the weekend. It is Friday and we are pushing below $40,000 at the time I'm making this video. Now, it might be very different by the time you watch because we are at some very critical support right now. In fact, I was on social media this morning and there were a lot of people freaking out. They're saying this is it. It's over. We lost support. It was fun while it lasted. We've been consolidating for a year and now it's time to go into the bear. That's what people are saying right now, guys. So in today's video, I'm actually going to keep it short and sweet. We're going to look at the price. We're going to look at the TA. We're going to see where we are on the Bitcoin structure. We're going to have a look at the fundamentals as well. And hopefully you will have a better understanding of what is going on right now, my friends, because if you are panicking, if you are in fear right now about these prices, because Bitcoin is back below 40,000, we'll definitely stick around to the end of this video. And without further ado, guys, let's dive in. Well, I guess we're already in the charts, right? But hey, if you're not subscribed to the CryptoZombie channel, thanks again for everyone who has been liking, subscribing, commenting. You guys are amazing. You're why I make these videos. And I do have my bear hat on today because the bears are out in full force. So let's have a look at the chart. So obviously right here, you can see we are below the EMA ribbon on the daily. And we did have a massive rejection right here on the weekly as well. And I did say that these candles are a little bit to be afraid of, right? Now you can obviously see we have the support right here. The next level for Bitcoin to go is around the $38,120 level. Now, when we were having a look at the Bitcoin futures, we were talking about filling this CME futures gap, which we did fill that, and I had anticipated that. So that wasn't really a bit of a surprise. You can actually see we did wick above it. We closed above it, but then today we're sitting below it. Now, this is very common. You can sometimes see that often we overshoot to the upside or overshoot to the downside. But should we actually be worried? Is the structure truly broken? Well, there was this very, very important level you can see right here that we did have right around that $42,000 level, which did act as multiple resistances, multiple supports over the course of the past year, okay? And we have fallen below that. You can actually see right here, we did in fact fall below. But what we are doing, and in yesterday's video, I said it looked a little bit more like some kind of a triangle, but really what it kind of looks like, if we just draw this pattern out like this, it's actually starting to look a bit like an ascending wedge, right? Now, ascending wedges are technically bearish patterns, okay? And considering that we have seen this out of a downtrend, that might be a setup for another dump back down to these levels. I'm not going to rule that out just yet, but currently right now, we are seeing support. And although I don't really usually trust the weekend moves, I would anticipate that Bitcoin would build some kind of structure here and try to break back above this $41,300 level, okay? And, like I said, that would essentially be us continuing into this rising wedge pattern. Of course, it is the weekend. So because we have Saturday and Sunday approaching, could we fall out of this and come down here, something like that? Possibly. I don't think it'll be that extreme. So ultimately, we do need to see where we close. But yeah, if we have a look once again back at the weekly chart, you can actually see right here that for the most part, guys, as long as we really don't close the weekly below $38,200, which was this weekly close back here on the $42,000 pump, then I still do remain bullish for Bitcoin. And ultimately, really, if you just want to simplify it, what you want to do is essentially just maintain above this trend. You don't have, you can overcomplicate it with all of these different, trend lines. And, if you're day trading, sure, you can make these scalps, but ultimately you just want to look at the structure. And you can see right here that ever since we had this peak around that $14,000 level back in June of 2019, we have held this legacy support for quite a long time. We had one little fake out right here, right? So as long as we maintain this level, I don't care if we come all the way back down to 37,200 because that would still keep us on this trajectory. Now, if we do fall below that, well, that would be a problem. But the one thing that you will notice, if I get rid of all this on the 3-day, we've had some very nice support here on this moving average, the 200 on the 3-day. So yeah, I mean, right now that's sitting at around 36,583. That's if we fall down today. But for the most part, guys, we're still putting in higher highs. We're still putting in higher lows. And you can even see over here on the CME futures chart, there's two different levels we can watch. We can watch this legacy trend and we can watch this legacy trend. And either way, no matter what Bitcoin has been doing for the past year, even though it gets very scary when we fall 50% and we get down in these levels, every single time we fall into this area right here, look, we fell into this area right here, massive accumulation, pump. We fell into the area right here, massive accumulation, pump. And now we're down into this area again. And I had said that it wouldn't be uncommon if we were to bounce around, in this area, scare people again, and just keep moving. As long as we continue to put higher highs and higher lows, there's absolutely no reason for me to be bearish at this point. As I said, if you are freaking out right now, maybe you are over leveraged, maybe you have too much money in crypto, but for the most part, it's not, like, in my opinion, it's not bearish. It's just consolidating. We've just been consolidating. And if you remember, for a long time, we were talking about this M-shaped pattern, right? And how we could come down, worst case. And this was my worst case scenario was we come back down to 29,000, which I do have some bids down there. Everybody watching the channel knows I do still have my buy orders at those levels just in case we do hit. But, the reason that I had spoke about that was because of what we had seen way back in the S&P. So if we actually go back here again, and this was a very similar pattern that we had between February of 1997 and February of 2009, obviously things are a lot slower on, the stocks. This was the S&P. I mean, look, same exact thing. We came up, we bounced down. We came back up. We put in a slightly higher high. We came all the way back down, faked people out right here. Massive bear trap. Everyone was selling. Everyone was saying that it was over. And then we literally just continued to absolutely skyrocket, for a lot of years moving forward. Now, the only thing that I will say right here, let me go back to the daily. This is the S&P, is that, we are having this consolidation in the S&P, and it has been on a downtrend ever since January, the beginning of the year, pretty much the beginning of this year. January 4th is when we hit the peak. So, we are still consolidating here, and right around the end of March is going to be decision time for the S&P. Now, I'm not saying that they're super correlated, Bitcoin and stocks, but let's be honest, we do have some of Wall Street in, and they are going to treat it the same way, right? So that's why I said, look at this M pattern that we're having right here. And, once again, just to remind you guys, going all the way back here again, look at the M pattern that we had back here. It's basically the same pattern. Let me switch it to the weekly so you guys can see again much clearer. Same exact pattern. Same exact thing that we're having right here is essentially what Bitcoin, is trying to do right here. Okay? This is not something that we haven't seen before. So ultimately, as long as we don't lose this structure, I think we're good. But even as we saw with the S&P, there was that quick bear trap, right? So ultimately, I still think everything's looking good for Bitcoin. We are putting in higher highs. We are putting in higher lows, and we are actually in the blue zone, which has been a very good level for accumulation in the past. Pretty good buy zone, not financial advice. But like Pixel Investor pointed out, if you just have a look at the flow of Bitcoin and we look at these divergences that we have over here, ultimately, this is what Bitcoin does, right? And he has this chart which basically points out this level of support. And you could see just by using a few different Fibonacci extension levels on the logarithmic, you're looking at, potentially $135,000 Bitcoin, $200,000 Bitcoin, or $300,000 Bitcoin still by the end of this year. I would put my bet more in the center. I'm looking around $180,000 to $190,000 Bitcoin by the end of this year. I know it may not seem possible to you guys right now, but look at these, look at these accumulation levels. Look at all this. People were just probably back here saying, oh, it's never going to go up. And then boom, it happens quick. When it happens quick. And, the time to be in these markets is these boring times, right? These times when people are scared, when people are bored, they're not paying attention to cryptocurrency. Oh, crypto's down 50%. I'm not interested. I'm not going to buy it. It's over. And then guess what? Those same people come back in 6 to 8 months. Bitcoin's now at 100,000, 150,000, and then they're like, oh, should I buy now? Should I buy now? I don't know. You guys had over a year to accumulate, literally between 28,000 and 70,000, and Bitcoin's at 150, and now you want to know if you should buy? Everyone who's watching right now, kudos to you. You are the people who will definitely reap the benefits. So you are amazing. Pat yourself on the back. Drop a like if you enjoy these kind of videos. But, don't just listen to me. We have Jurian Timmer, right? Now, he is the director of global macro over at Fidelity Investments. And he made a very long Twitter post, which I'm not going to go into because it's like just a lot of math. It's a lot of math. If you're interested, go look at it. He goes through all these crazy different things, which I am not smart enough to do. But essentially, he was comparing the growth of Apple essentially to Bitcoin. And, looking just mathematically, he says they don't visually look the same, but they are following a very similar trend. And they are both technically technologies, right? Bitcoin is a technology. Apple is a technology company, right? They make different types of devices and things like that. And he does show that they are very similar. So what's interesting is he says, what's next for Bitcoin's demand curve? Below are two possible measures based on the historical S-curves of mobile phone subscriptions and internet adoption, right? Now, the internet is something that people called a fad, right? They said that wasn't going to go anywhere. And I remember when the first iPhone came out and people, even I was looking at it and I was like, this is so stupid. What are you going to do with this, right? Well, now everyone has it, right? So he actually shows these different slopes. And you could see if you just look at the top line being the growth model for mobile phones and the bottom line being the growth model for the internet based on users and a percentage of population, you could see essentially by the time you get out to the year 2037, which if you can stick it out for a little over another decade, you are looking at a minimum price of Bitcoin at around $1 million. And potentially a maximum price of Bitcoin somewhere around $3 million. So within the next decade or so, you're looking at about $1 million to a $3 million Bitcoin. So when you're over here, looking at these prices today, I mean, literally, this is what we're freaking out about. Actually, no, let's zoom out. Let's zoom out, guys. This is what we're freaking out about. This right here. This up here. Look at this growth. Look at Bitcoin. So, you have to take it with a grain of salt and you have to realize that these moves are opportunities. And, we do make crypto videos every day and it's fun. Bitcoin price is going up, it's going down. And, it's fun to be exuberant and have fun and trade. But ultimately, if you believe in the underlying technology of Bitcoin, which I do, it's a no-brainer. It's a no-brainer. Should you buy here? Yes. Well, not financial advice, but I would buy here. I've actually already bought a lot, but if it stays at these levels into Monday, then I might consider moving up my buy order just a little bit. But ultimately, look at what's happening in the background, okay? So Bitcoin price is down. Everybody's sad. Boo-hoo. Go cry. Well, total hash rate just hit an all-time high, which means that the Bitcoin network is literally the safest and the strongest it has ever been. And on top of that, the network difficulty just hit an all-time high, which means that there are more miners competing right now, which means not only is the hash rate at an all-time high, but there are literally more miners competing for the rewards. This is crazy, guys. You're not seeing them shut off. You're not seeing them capitulate. In fact, you're not even really seeing miners selling a lot of Bitcoin right now. So that's definitely something to pay attention to. And I just want to end super quick on, yesterday we were talking about Charlie Munger and he was, kind of ragging on cryptocurrency. He didn't have some nice things to say, but he did have some things to say about inflation, which is kind of funny because we do know that over the course of Bitcoin's existence, the dollar has lost 99.9 repeating percent of its purchasing power compared to Bitcoin over its lifetime. And in just the past 5 years, it's lost over 95% as well. I showed you this in 2 videos ago. Go back and watch it. So Charlie Munger comes out and he says, inflation is a very serious subject. You can argue it's the way democracies die. When democracies die in Latin America, very interesting he chooses Latin America, by the way, inflation is a big part of it. So it's a huge danger. Once you've got a populace that learns it can vote itself money, if you overdo it too much, you ruin your civilization a lot. So it's the biggest long-range danger we probably have apart from nuclear war. I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis. So he says this in one breath. Then you have Warren Buffett investing in a digital bank. And then you have the president of El Salvador, which is a Latin American country, who just adopted Bitcoin, land of the free. Very interesting, guys. I do believe that we are living through some incredible, incredible times. In fact, just yesterday, it was breaking news. There wasn't even a lot of time for me to report on it, but Ukraine has passed its law on virtual assets, recognizing crypto as a legal asset, and will include an official regulator to oversee the activity. So the Verkhovna Rada, I think that's what it's called. It's essentially Ukraine's version of parliament, passed its crypto bill with majority support from 272 out of the 450 members, which is, yes, more than half. The new law is an additional opportunity for business development in our country, according to Ukraine's deputy prime minister. Foreign and Ukraine crypto companies will be able to operate legally, while Ukrainians will have convenient and secure access to the global market for virtual assets. So obviously times are changing, things are crazy. And yeah, I mean, right now, yes, crypto's falling, but if we have a look on the daily right here, you can also see that we do have the stock market. Well, actually right now the stocks are having a little bit of a rebound. So we could have a little bit of a bounce. Like I did say, honestly, like we are at the level right now where Bitcoin should be looking for a little bit of a bounce. And there you go. Look, we are starting to get the bounce right there. All right, so we may continue to build this structure. Doesn't say that we can't go lower eventually, but like I said, this does appear to be a bit of a rising wedge pattern. So, you know, generally speaking, they are bullish when they end, which means we could just come back. Like we could get all the way up to 46 and then just come right back down to around 42,000. But I do believe if we go back to this ribbon right here on the weekly, the ribbon is sitting at around 46,373. And I think if we do have a breakout above that, retest it, you know, the ribbon curve, something like this, then I actually think we're out of the woods. And I think we're going to just start going on the uptrend. All right. But ultimately, guys, you know, zoom out. Everything's fine. We're still putting in higher highs and higher lows. Stop freaking out. Get off Twitter. Stop reading all these crazy people freaking out, making you scared about your money and stuff. We've been doing this for over 5 years on the CryptoZombie channel. We're not scared of anything. We've been here since the top. We rode it all the way down and back up and down and up, and we can ride it all over because at the end of the day, Bitcoin's going to the moon, number go up. A 5-year-old can see this chart. That's it for me. Thank you so much for coming back to the channel. You guys rock. I love you. And if you are not subscribed to the CryptoZombie channel, what the freak are you waiting for? And if you're looking to trade, I don't recommend it. If you are a beginner, use a paper account. But if you are interested, I do have tutorials. You can check them popping up right here, right now. $8,000 in bonuses below. My name's K-Dub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.